Unfortunately, there's a misconception in tax law, especially international tax law, by making something complex that's going to make it legal and it's going to avoid having to pay taxes. But unfortunately, that's not the case. Lots of times each year, taxpayers approach us because they formed a trust inside of another trust, mixed with a limited partnership or a foreign business or a domestic business and a foreign trust, thinking that if you push it deep enough, that you don't have to pay tax on it because you're not really getting the income. It's going to a company that moves it offshore, then it comes back into another company. It doesn't work that way. From a US tax perspective, at the end of the day, someone is holding the bag. So if you're earning income, even if you're shuffling it over 5 or 10 different companies, it doesn't mean that you're going to have to avoid tax. Ultimately, what happens in these situations oftentimes is taxpayers find themselves in a situation in which they owe thousands, if not millions of dollars of taxes over several years they didn't pay, various international fines and penalties when there's the international component, and even possible criminal. There was a recent case in Florida where someone had tried this and now they're going to do 5 years federal prison. So, something to keep in mind, just because it's complex doesn't mean it's legal. Typically, it's better just to keep it simple.